traders. Hey, hey, hey. What's up? I see we still have like a handful of people from Benzinga here this morning. So if you are visiting as a guest, don't be bashful. Feel free to say hello. Feel free to ask questions. The afternoon meeting here is where we do a lot of our education and progress and mentorship and all that good stuff. So let's jump in. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is pretty much unchanged here. All right. Oh, I'm not in that Baidu. I'm not in this. Not in that. Not in you. Boom. All right. Cool. Let's jump in. So how did we end up actually even closing today? Did we even close green? We did not. SPYs here are down 0.2%. The Qs are exactly flat, which is where they opened. And the IWM is down 0.4%. So overall, the market held the really key support level that we have been discussing, which is 503 for the SPYs. But I'd be lying if I said that it was like an exciting day today with a dramatic bounce, bull bounce off that big support zone, even as we were extended into it. We kind of spent the whole day sitting in front of it, digesting in front of it, which I would argue is generally more bearish than bullish at this point. We got Vixpiration coming up, so maybe that can help create a little wacky price action. But broadly, I would consider today's action just the way we just sat at that level pretty much all day. You can see this 503 level on my yellow line here for the SPYs. We ticked below it, we ticked below it, we ticked below it a handful of times. We kept snapping back up. So, roughly this market was doing a pretty good job holding this 503, but we were never able to break up. Jerome Powell spoke today at like 1:15. You saw that created a decent downtick at about 1:30 when he echoed the sentiment of the other Fed members and saying that the path of inflation hasn't continued down as fast as they would like, and they will keep rates higher for longer if they need to and use their policy tools to do that. So kind of just further indication from Powell, and he's probably the most important person that we're not seeing that like June cut that had been priced in for so long. I think at this point we still have a cut priced into the market by September. So we'll see. Obviously, it's a rapidly changing environment. Just in the beginning of this year, we were pricing in 7 cuts. Now we're pricing in pretty much like 1 on the year, and it keeps getting delayed. So there was an initial downtick on that, but the market did a good job holding support. And actually a little bit excited here at 205 when we broke up. I thought that might lead to more of a real move than it actually did. For no other thought process than the fact that we couldn't break down when Powell came out with those more hawkish comments. Couldn't break down out of the range and get below 503 when he was providing some not very bullish commentary to the equity market, and then we began to snap up, and I'm like, oh, maybe we're onto something here. But then they faded that back down also. So just a bunch of choppy price action intraday for most of the midday session, which I would describe as disappointing. Today was kind of like a relatively big day 3 to the downside. We were approaching extreme extension. Extreme extension today would have had to get us to like the 501 to 502 area. So at 503, we've got like $9 of extension from the 80 EMA on the daily chart. I think at one point we were looking at the oscillator at negative 92 or something like that this morning when some traders were coming in and trying to take advantage of that by buying the IWM and a couple of things early today. But again, there was just no real bounce off that. So $9 of extension, I thought that maybe the added effect of being at such an important support level could give us a better bounce, especially for some of these really beaten up stocks. And for the most part, again, I would describe it as disappointing. There were some okay trades out there. There were a few trades out there that were decent where you could have made a few bucks if you managed your execution well and managed your risk well, and you weren't too greedy on the trade. Which honestly, for me, if I was in any of them, I probably was looking to be a little bit more on the greedy side, looking for that bigger bounce. And obviously, we weren't able to get it. The market never gave any follow through. So, SPY's 503 support is still intact, but sitting in front of it all day is more bearish than bullish. It enables these moving averages to catch up on the downside. You can see this 8 and 21 EMA on the daily chart of the SPYs have already crossed. So we will be less extended on a retest of 503 tomorrow than we were today, which therefore means we have a higher probability of actually breaking through it. Pat did also note, and I kind of agree with him, that there is a possibility that we could gap up above today's high tomorrow or into today's high tomorrow, and if that happens, you could still see some follow through. So I will absolutely leave that thought process on the table. There is room still for this market to bounce back to 508 to 510, I think. And then, again, maybe you get that upside lower high in the market, which I think would be much more bearish and more telling. That's the area where I would really want to short into, is if we get that bounce back into that area, clear out on some of the longs that I was purchasing today, and add back into some of the shorts that I have cleared out, or even potentially start some new ones if we can get that bounce. I think the tougher trade, though you might have to force yourself to do it, is like the momentum short through 503 tomorrow, just because there's still going to be a decent amount of extension there. If you're taking that, you're kind of betting on just this feedback cycle of selling really coming into the market, leading to further momentum as what has been a really strong bull market for the last 5 months, dies on the vine a little bit. So I think we can better assess that tomorrow when we see how we gap and how the information is looking in the morning. So that is the SPYs. Let's see if we get a different picture from the Qs or the Russell. Qs are still a little bit stronger, but they're below that key 433 support. I really wanted to see intraday if we could get back above 433 in the Qs. We were able to tick above it. We were not able to hold above it. We were not able to close above it. Similar to the SPYs, I consider this to be a little bit more of a bearish consolidation day. It's going to help to satisfy some of that extension. There is still an opportunity for the market to bounce back to the mid to upper 430s for the Qs. But sitting here, I would argue, is more bearish than bullish. Finally, popping over to the IWM. In some ways, the most oversold. So we had 2 really heavy sell days in a row coming into today. The IWM still closed down 0.4% today. TLT, while closing well off lows, is still down 0.5%. So that is not exactly supportive for the Russell. Just keep in mind what we've discussed is that the IWM, I think, is going to be more interest rate sensitive, and the Qs are going to be more geopolitically sensitive right now with the situation that's going on. So when we get new news that is bad geopolitically, it's going to negatively impact the Qs more than it will the IWM. If you get new news that's leading to higher interest rates, it's going to be worse for the Russell than it is for the Qs. So when the market is moving on those new news events, make sure that you're keeping that in mind with your shorter time frame trading that you're taking on in those situations. But yeah, overall the IWM was able to hold 193. 193 was like $7 of extension. That really was like the extreme extension point for the Russell. A little bit of support down there as well. So low of the day is 193.36. It held okay. Intraday, there were some okay trades today. Again, I probably would describe it as a little bit disappointing. I wanted more upside follow through. I particularly remember with the IWM calling out this inside 5 and up. Some of you guys, Chris J is an example. If he's still here, he was getting a nice jump start on this IWM and kind of reading where the oscillator was and how heavily oversold we were, understanding that 193, which we were trading down towards, is some support. For me personally, kind of wanted to see the whites of their eyes a little bit more for the execution with a trade setup, whether that's a hammer or something else, and how it manifested itself as an inside 5 and up. I normally don't like inside bars for counter trend trading. I'll do it sometimes depending on the other circumstances. Most of the time, inside bars are going to be for with trend or with momentum trading. But in an example like this, where you have a heavily oversold market on multiple time frames, it's coming into a bigger support level. I like the idea of this time of the day, taking that inside 5 and up, at least for initially for a snapback to the 80 EMA, or I should say the space between the 8 and 21 EMA on the 5-minute chart, but then holding to see if that can lead to a little bit more of a daily chart move. This IWM could easily snap back to 198 and still be bearish. It could snap back to 198, create the lower high there, and then roll back down, and maybe next thing you know, you're getting a test of the 200-day. But that's a great trade to try to take advantage of that oversold bounce. We did get a move to as much as 196 intraday. That's a pretty good risk reward if anyone held through all the chop there. Yet I would also at the same time describe it disappointing that we didn't get more follow through, especially post this 2 p.m. snap higher with Jerome Powell speaking. So that's kind of the market. As far as individual stocks go, I kind of had a little bit of a shopping list today for some names that are just super, super beaten up, as the market itself was also getting extended into some support. The trades there were a little bit mixed. We identified AMD really early on. It was an idea in the morning meeting. The 160 level being so important, you had to pay up way too much off 160 to be able to get stock. But great relative strength off the open. I think we called out within the first 5 minutes that you could be long versus the opening low. It was like the first thing I noticed this morning that was green. And, it kept running into this heavy selling at 164 that it couldn't clear up through. So an okay trade. I would probably describe it as moderately disappointing as far as the follow through with pretty much everything else that I'm talking about. It's all moderately disappointing with the follow through that we were able to get. Yet the trades with the execution, for the most part, they worked decently well. So there was that. We were looking at Shopify to see if that could kind of RDR. This was difficult and sloppy. I know some people tried it off the first bar. I think people got break-even trades, then try to, again, potentially off this tail. Same deal, enough to give you at least a break-even trade before failing down. I was looking to see if Palantir could recapture 22 today. It never really ticked it, but I did think that this was a good long in conjunction with the market. Remember, we want to be taking our cues for our individual stocks based on what the market itself is actually telling us. We want to be trying to take the ideas that we have in the morning meeting and then apply those ideas onto what the market itself is actually telling us. So, I think that $22 is like the trigger for Palantir, but taking that inside 5 and up with what the market was doing at the same time is also not a bad idea. Give me 1 second. Just deaded a call from T3's CEO, which I shouldn't really do, but we're doing the afternoon meeting, which he should know that I'm doing, so I just texted him to let him know I'll call him back after. Anyway, so it's a decent little trade there in Palantir, but it never actually cleared through that 22. Same deal with this Unity, looking at $25. Gave a decent little oversold bounce. Big volume coming into this at a certain point. They were puking this thing out. Never was able to test that 25. Never even got close. But for an oversold bounce on a stock that's oversold on multiple time frames, not a bad spot. This BYON could not bounce for anything. This thing has been absolute destruction. We have another opportunity for an RDR tomorrow through today's low if it gives it to us. But this thing is getting really nasty. It's traded right through recent support despite being extended. Traded right through the 200-day. I tried this thing a couple times this morning and was never able to get any traction on it at all. And did AI ever trigger at all? Yeah, AI held its morning low. But this is another one, and I ended up not focusing on this. But this is another one that just turned out to be most of these trades, maybe not BYON, but almost all these trades seem like they worked a bit, but then weren't able to actually give us any follow-through, which I would describe as disappointing. And they also made it difficult for them to swing. Because, if you nailed, I don't know, I didn't focus on AI today, but the intraday execution looks difficult. But if you nailed like the Palantir that I was just mentioning here at this low, actually this one might have been okay to hold. You have a 50-cent cushion, you could probably swing a little bit of that. But a lot of these are AMD is a great example. AMD closing at 163.50. I feel like if you had good execution off the open, your price is somewhere below 163, but not really good enough of a profit cushion, I think, to actually swing the trade. So it'll be interesting to see if what Pat was saying into the close actually is accurate, where if they were to gap up this market tomorrow, which I certainly think is a pretty big if, a lot of things are not looking great. If they can gap this market up tomorrow to or above yesterday's high, it'll actually be interesting because I don't think it'll let anybody in. And in some ways, I think that's the most bullish case I can make right now, is that the market likes to sometimes cause maximum pain for the maximum amount of participants. And if things didn't trade well enough today for most traders to feel confident really adding to long swings, I don't see how you could. And then they gap you up tomorrow to today's high or to above it, you're going to look at it and be like, I have no ability to execute here. But then maybe shorts can get squeezed out off of that a little bit, the weak-handed shorts, and then you could get, kind of that bounce back to that area I'm talking about. And then we still have to see if the lower high actually comes in or not on the market. VIX is hugely important. We got VIXpiration. What day of the week is it? Today's Tuesday, right? I'm losing my mind recently. We got VIXpiration tomorrow, so we'll see if that changes this VIX structure at all. VIX was an inside day today. Not that the technicals on the VIX itself really matter very much, but within the range of yesterday. Closed back below 19, but definitely still need some more clarity from the VIX. It'll be interesting to see. It's like I said in the morning meeting, and the biggest thing about today's trading session is that I don't think anything changed, right? Like today, this morning, felt like such a pivotally important trading session. Because all right, we're down here at this 503. Bulls really need to take a stand. We need to see more of that vol selling coming back into the market that brings the VIX down, creates an underlying bid to the market, and snaps the market back up. Or you lose that 503, and then bears are becoming totally in control, and then maybe, we're getting closer and closer to maybe a gamma flip in the market, and then we get a feedback cycle of selling that actually comes in at a certain point. Felt like a very pivotal trading session this morning when we were doing our meeting. And again, we still had some good trades during the day, but at the end of the day, I don't think we got any resolution of that question we had this morning. Are we going to see, just a return to vol selling, which brings this VIX right down, creates an underlying bid to the market. And that's also why I'm saying, and I'll repeat it, what I said in the morning meeting, which is if we do get that bounce that I'm talking about, if we do get that bounce, let's say SPY 508, I think is very reasonable. If we were to get that bounce, keep a little bit of it. Keep a little bit of those longs. Because while right now it's probably a slightly higher probability that we run into resistance in like the 508 to 512 area and create a lower high there, and that lower high could be something to short into and be very bearish, there is just a chance with the way the market dynamics have been that if they sell that VIX down and create that underlying bid to the market, the next thing you know, we're getting back above 515. I think that if you see the market get above 515, then you got to throw out the window your short thesis. So let me try to be a little bit more concise with my statement, because I think it can be very powerful to think about the market in terms of if-then statements, right? So we've got a bunch of different scenarios that can play out right now. We had no resolution to those questions today. If the market were to give that bigger gap up tomorrow, then we could see a move up to 508. If we get into, I'm going to call it like very broadly 508 to 512 in case they overshoot it a little bit, and you get a lower high there, that's something that you want to be selling. That's exactly where you want to be selling some of your longs into if you were able to get any today/tomorrow, which might be difficult. And that's also where you want to be shorting into technically to see if that pivot comes in. But if we can really start getting above 515, then the short thesis is out the window. The VIX is probably coming down, and that's why you want to make sure that you maintained some of your longs that we're looking for from the bounce trade today / tomorrow. Because if the pivot high fails that we're potentially looking to put some shorts into, you got to stop yourself out of those shorts, I think, by 515, and then you'll be very glad that you still have, I think this morning I said like 10 to 35% of your position left that you had to the long side from when the SPYs are at, let's call it 503. Because that, 10 to 35% of your position, while being the lower probability situation probably right now, will be very profitable. So that's kind of the if then on the upside, giving you a couple options. One if then being for a lower high, one if then being for basically just a resumption of the bull cycle that we've been in with the VIX coming down. And option number 2 though is also kind of one of two things. Either you get that lower high like I was just talking about, but then new lows actually come in. We lose 503, and I think that could be extremely damning for this market. Or the other scenario would actually just be a momentum break of 503 in the next couple days. So we'll see which of those scenarios kind of play out. And that's why I think that we're just at such a pivotal point here for the market, because there is still a scenario for this market, to use Dennis's term, kangaroo all the way back to 515. But we are also detrimentally close to, I think, some real triggers here that could create a gamma negative environment and further systematic selling to come into the market, and a deeper correction. I mean, what are we down in the SPYs? 3% from highs? I know the IWM is significantly more than that. We're probably down 8% now in the IWM from highs. But SPYs being down 3% is absolutely nothing. I mean, I think on average you see a 10% correction in the S&P every 9 months. On average. There's obviously plenty of times where it can happen more often than that in highly volatile environments, and obviously times where it will happen less often than that. Bill saying 5.25%-ish. Okay. It's a little bit more than I thought from all-time highs on 328 to the low today. Thank you, Bill. All right. That is all that I've got on my end. I am happy to take a look at any questions that anybody has about literally anything. So scrolling up here in the VTF, see if there's anything going on. Jerry was trying to be involved in this BYON. Yeah, this just wasn't recovering right. Even in that snapback at 2 o'clock, it didn't really recover right. From Carol. Looks like the answer for this question is still pending. It might take some time. Do you anticipate VIX selling on the day of expiration, or can it go either way? I think that expiration is generally, and I'm seeing Bill's response to you in the corner of my eye also, the expirations generally can create what Bill here is describing as like an unclenching, which basically just means that you increase the possible outcomes on what the market can do. So it doesn't necessarily mean that the VIX moves higher or lower. It just increases the probability, I think, of starting to get those bigger actionable moves in one direction or the other. So that's kind of what I would think about that. And so we've got VIX expiration tomorrow, and then we've got options expiration on Friday, which has a similar unclenching effect on the market itself. So something to keep in mind. Cool, thanks, Carol. Popping over to the YouTube where we got a couple of questions. What do you think of SMCI and Triple M? Two totally different stocks. SMCI got upgraded today. Oh, did it? I didn't even see that. And then it squeezed up. I don't necessarily consider that. I know you're asking me if that's a gamma squeeze. I don't necessarily consider that because I did not see a lot of option flow in SMCI today. Unless anybody else saw a ton of bull flow in SMCI that I missed. This just looks like a strong stock, especially if it had an upgrade today. It's a very volatile name, we know that, so seeing it move 10% in a day is not that surprising. It broke up technically, it was relatively strong, so I think that it was just the strength of the move, and got helped technically, and probably got help with the upgrade that you're mentioning, which I did not actually see this morning. Thank you, Joy. Oh, and you're asking me about Triple M is the other one you're asking about? I don't trade this name too often. I'm assuming that big gap down in April is earnings, but I'm not 100% sure. I see there was another big gap down in January. And then another big gap up there in March. I don't know. This name's been a little all over the place. That's too many large gaps for those to all be earnings reports. So something in there was some other news. But broadly, I think that the stock is boring, yet in a bearish pattern. It's bearishly consolidating post this huge gap down that happened in the beginning of April. So fairly neutral stock, but more bearish than bullish, and honestly not one that I would really want to trade. Gabriel asking me about DraftKings. Yeah, we saw the relative strength in DraftKings right away. And that's what we wanted to try to focus on today was relative strength, though they certainly did not make this easy. Opening relative strength, market whacked down and went red and then had a huge turnaround. Overall, I still think DraftKings is holding in great. This is one of the best growth stocks that have held up. There's so many names out there that you can type up, and we went through a few of them that are growth names that have gotten absolutely demolished in March and April. Doesn't look anything like the actual market itself. And DraftKings is not one of them. There's been a lot of relative strength here with DraftKings. So relative strength today, relative strength overall on the daily chart. One to keep on the radar. Maybe $46 is a little bit of a breakout spot. And then you're asking me about Micron is the other one. Micron looks good. I like that pivot that it put in today. Good relative strength. It looks like it closed flat-ish on the day, flat to green. So you got good relative strength there from Micron. It's good pivot off the 21 EMA. It's holding to some support. I think Micron looks good. Thanks, Gabriel. Back over to the VTF with Michael. It was constructive for me to try to put on stops before the trade. It very much refocused me on risk and a plan. Just make sure your stop doesn't get triggered before you actually enter it. When I got stopped out, I engaged the chop bots, but I think I see risk better with stops early. So I generally recommend for traders to put their stops in as soon as they enter the trade. And that could be, doesn't necessarily have to be before you put the trade on, but it should be immediately as you're in it. Like generally I think, let's just take a long trade, that the steps are you either buy the stock or put the bids out to buy the stock, step one. Step two is get the stop loss out. Step three is to get your first offer out to cover risk. That's generally what I think the best process is. I don't hate the idea of what you're talking about, though. And maybe this is, if there's any traders out there that struggle to manage risk and struggle psychologically to get their stop losses in because they, as soon as they're in the trade, they're married to the trade. I like the idea for those people who struggle to do that to consider, if possible, to have their stop in prior to going long. The only thing that you got to make sure on that is that you're not going to sell out if the stop triggers. If you put, I'm kind of speaking out loud here. I've never done what you're describing. That'd be the first thing I would say. So I don't have actual experience with it. The one thing to be careful about, though, and I'm not really sure how this would play out, is let's say you're going to go long, and the first thing you do is put in a sell stop. That sell stop might get marked as a short sale on a trigger, and you can't sell out your long stock on a short sale ticket. That would be a violation. But the other half of my thought process is stops or sell orders that are held on the front end level. They're held on like the server level. They're not held at the exchange level. So maybe the system is smart enough to know when the stop triggers, if it's actually a stop to enter a short, in which case it puts you on a short sale ticket, versus a stop that is exiting you on a long, even if the stop was out first. So that would be the one thing that I would just be careful of. Just try to pay attention for that. If it happens to you one time, I think compliance will hit you with a warning. But if it starts happening multiple times, then you could start racking up fines and all that fun stuff from FINRA violations. I like the idea, though, especially for anyone that struggles to manage risk or struggles with their stop losses, to put the stop in first. Just make sure it's not getting you illegally short, or not getting you out of a long on a short sale ticket, which would be same but different. Thoughts on HE, Hawaiian Electric. They're still hitting this thing down? I thought that this company had gotten through the situation that had happened last August in Hawaii. I have no idea what caused the volume today and why it was down 10%. Is there news on this thing today? You want to know 12:30? I mean, the stock's just getting brutally sold. So you want to look for a signal to buy. I like buying on this candle at 11:50, even though it failed. I just want to point that out. You never know that's going to fail ahead of, before you're taking it, but you get this little volume pickup with a bottoming tail, a whole bunch of red candles in a row, very healthy extension with the 8 and 21 EMA. I like that for a long. Basically what I'm looking for here is whenever you're going counter trend or counter momentum, even in this case, you want to be buying on the way up, not buying on the way down, and you want to make sure that you have an actual signal, right? So if I'm buying here, I know I'm buying on the way up, and I have a signal. It's that hammer candlestick on higher volume that represents buyers coming in and taking some degree of control from sellers. Then I don't have any signals. Maybe at lows you have an inside 5 and up. Do you even have that? Yeah, you do. You have an inside 5 and up at lows. It's okay. It's just okay. I mentioned it earlier when we were talking about Palantir and the IWM. I generally don't like inside bars for counter trend setups, right? I like them for continuation setups. Doesn't mean that you can't ever take one counter trend. You can once in a while when the other circumstances call for it. Very healthy extension into a support level, something like that. That's what the IWM gave us this morning. But here with this HE, especially if this is moving on some sort of a news event, it looks. I wouldn't say no to this, but it looks like a trickier trade because the time correction of the inside bar is inherently bearish. It's allowing these moving averages to catch up, which is taking away the reward potential of your counter trend trade. So you're losing some reward potential on that. But what I do like is the capitulating volume right ahead of it, MAC the biggest volume candle of the day. And I do like that there is still a very healthy degree of extension, especially to the 21 EMA at that time. So not my favorite with the inside and up counter trend stuff. We can make some exceptions once in a while when it calls for it based on other pieces of information and the circumstance. But yeah, I would just say it's kind of okay here. Hawaiian Fire Department expected to give final report on the fire today. Thank you, Dennis. One more thing in YouTube asking me for GL on a potential squeeze. So I haven't been overly following the GL story. I don't really remember what happened, honestly, on this day they crushed it. I just remember the next day that the company came out and defended themselves. I don't remember if this was a short report or what, but I know the next day the company came out and defended itself. At this point, this thing is creating a bear flag, though. And again, I haven't been following the story closely enough to give you a real strong thought process on it. But it's basically creating a bear flag. But with that said, there's a ton of extension still. The 80 man on the daily is at like 75 or so. This thing could easily bounce back $10 and then still fail. So we'll see. There's a short report on the 22nd. Thanks. Yeah, so there's room for them to break this consolidation higher, the inside day higher, all that, to give you a bounce back to 70. But it looks like a tricky trade. Sankit in YouTube is asking me about WISA, which actually happened to be one of my best names today. My second best name of the day. I don't think you knew that if you're just in the YouTube. Any thoughts on it? So yeah, actually, I do have some thoughts. So we have discussed, and as a team, that on several occasions in the last year or so, a lot of these companies, and I'm curious, when did this thing go public? Not during COVID. Not in the post-COVID bubble, it appears. But there's a lot of reverse splits that are happening right now, or that have been happening slowly over the course of the last year, of these growth companies that were not very good companies that the investment bankers and everyone else just threw into the unsuspecting hands of retail investors during COVID, because there was a bubble going on and there was a lot of opportunity for everyone to make money, except for the bag holders, who are retail investors who get caught up in some of the hype of SPACs and massively overpriced companies. And now we're seeing a lot of the reverse splits come into play, partially because they're being forced to do it. Some of these companies are under $1 and they're going to get delisted, and in order to not be delisted, they're reverse splitting. And what we're seeing on a number of occasions now is big squeezes post the split, because the split reduces the float by so much that it just enables these companies to squeeze higher. And this WISA is a perfect example of it. So this thing had a tradable float of, I think, 225 million shares. I got a calculator out on my other screen here, and then they did 150 to 1 split. So they reduced the float on the stock with this 150 to 1 split from 225 million shares tradable to 1.5 million shares tradable. It just completely changes the company. And I took a quick look at it pre-market when Jim here on the team so kindly provided me the information on the split that enabled me to make some money on it. So appreciate you again, Jim. The company is, whatever this thing is awful for good reason. I mean, it looks like this thing is working its way towards zero. I guess they call it a semiconductor company, but the numbers on this company are disgusting. As far as like income and sales, they got 2 million in sales. I mean, these numbers are atrocious. This company looks terrible. And I half joked this morning when it was going higher and I was trading it. I said, well, the company fundamentals don't matter at all, because they just made the float 1.5 million shares instead of the 250 million shares. And yet off of that, it had the biggest volume day that it ever had. This thing traded 200 million shares today. This thing turned over its float 150 times. It's just insane. So these things have the potential to just totally squeeze. So it's all about risk reward. And I remember sometimes my biggest problem with these things is I do get out of them a little too early. Because I'm like, oh man, this thing is so extended and it's such a piece of crap that I get out, even though the whole reason I got in was because it's a piece of crap and it could totally squeeze higher. So I started buying some pre-market below $3. I think my best buy was $2.51, and I had like a lot of stock at a certain point on this. I had a lot of stock. I did not have a super aggressive game plan with the majority of my position. I probably was out of the majority of my position by 4. But then I held some for a bigger move. Just because I was almost, you want to know another example? Root. This thing kicked off, I think, relatively shortly after the reverse split. And then it went from $8 to $85. I don't think that there's been any change in the company. And that's almost what I was thinking when I was trading this Visa today. Like, I had a stop loss out, I had no more offers out, and I went and got lunch at like 11:45, I guess it was flagging again, 11:45. And when I got back from lunch, it was, and I had to take care of a couple quick chores also, so it was a little bit longer of a lunch than normal. When I got back from lunch, it was trading at $8.30. I hit out at $8.37. And I'm like, okay, like, whatever, this is ridiculous. I'm out. It's stupid extended. Like, this move is crazy. I'm just going to take my money. And then even as I hit out at the remainder of my position at 837, I was like, but what if I got the next root on my hands and I'm seeing this thing at $80 in 3 weeks? It could definitely happen. So, I don't know. What do I think of it? I think that when they're doing these reverse splits, and I've said this in the past, we have to have these on the radar because they can do exactly what this one did, and they can create a lot of just trading opportunity, and they could give you a fantastic risk reward if you get a move from $2.50 to $8.30. But I also think it's worth keeping in mind that these are actually probably really crappy companies. Michael letting me know that Weeze's product is an HD alternative to Bluetooth. Think HD Bluetooth, but you need their box or embedded tech. It seems a little use of IMHO. I don't remember what that stands for. I struggle to keep up with. It seems of little use, in my honest opinion. There we go. I struggle to keep up with all the kids' acronyms these days. Yeah, and I mean, if you look at the numbers and the sales that the company actually produces, I agree with you. It seems like of little use. From Keen here in the VTF, you went over this a little yesterday, but to further elaborate yesterday, around 10:45 to 12 o'clock, the SPY's Qs in the IWM bounced. 10:45 to 12 o'clock, a little bit of a bounce, sure. And around 12:15, they all reversed down. The IWM fell the least, even though at 12:15 time, the IWM was down the most of the three on a percentage basis. Yep, that's all accurate. You're implying that the IWM held up best because the fear yesterday was geopolitical and not interest rate related. Yes, that's exactly what I'm saying. Essentially what I'm trying to get at is if you get a scenario where all three indexes put in a similar pattern, it might not be best to go after the weakest one. It's more important to identify why the market is selling off. Sure, so relative weakness and relative strength are extremely important. We need to remember that relative strength and relative weakness can happen on multiple time frames. So on the daily chart right now, very clearly the IWM is relatively weak to the Qs. So big picture right now, if I want it to be long something, I'd rather be long the Qs than the IWM. It's going to give me the better bang for my buck. But what we've seen very consistently now for a couple of weeks, because over the past couple of weeks on several different trading sessions, we've seen geopolitical fears pop up, related to the situation with Israel. What we consistently see in those situations is every time that happens, the TLT bounces a little bit as a fear trade, so it actually is lowering interest rates a little bit, and so that will help give the IWM some relative strength into the fear trade. But also, on a fear trade, people want to just raise money and get safety, right? That's why they want to own the treasuries, because it's the safest thing you can have outside of cash, basically, but it can still give you some return. Cash, is going to be safer than the equity market potentially in a time of war or geopolitical uncertainty. Where is the most amount of money in the market right now? It's in the NASDAQ. The NASDAQ is the most expensive part of the market. It's where the most amount of money is. It's where everybody's got their money parked in Apple and Amazon and Google and everything else. So if people are rushing to safety, they're going to buy TLT and they're going to sell mega cap tech stocks because that's where they have most of their cash anyway. And that's what will be relatively weak in those moments, in those scenarios. That's why it's important to fundamentally understand news a little bit. Whereas if the geopolitical situation improves, the Qs will probably bounce back best, and then it's more about interest rates again, which could be negative. It could be relative weakness for the IWM if the geopolitical situation improves because maybe the TLT sells back down a little bit, and that's what happens. So thanks, Keen. I hope that helps with your understanding. From Kafung Moon. Hey Derrick, I didn't take AMD off the open, but I took it at 9:45 when it broke through the inside 5 high. Okay. But it immediately reversed and stopped me out. I was thinking the 9:35 bar, a downside tail with a high volume, it couldn't break down and showed relative strength, would give me follow through. Okay. I don't hate your trade. You're going after the relatively strong name. You have the inside 5 set up for momentum. It's still the beginning of the day, but the market was still weak at that point, pushed you down, and this AMD ran into a big seller at 164. So, just didn't work out. Also, a stupid question. I'll be the judge of that. I know that the market does not care about my few hundred shares, but I've been experiencing a lot like this lately. That I have stocks tick to 1 penny below my offer for me to cover my risk, or tick to the exact penny but not get my order filled and then never come back. How would you deal with a situation like this? I don't think the market cares about my offer. Not sure if hiding my order helps, but at the same time, hidden orders trigger last. Yeah. It's a little, one of my pet peeves on the market is just the way kind of dark pools work versus the light market, where and it's one of the ways that HFTs can kind of make unlimited money, is that if you're offered at a certain price, they will, let's say you're offered a certain price, they'll sell that stock on like a dark pool at like 1/10 of a penny below your price, and then they'll end up buying back into you. But if you're offered at the top, it means that you might not get the fill, because that HFT algorithm actually tick your stock in front of you, because they're doing like kind of what's called like a 0+ strategy, where they can basically take 1/10 of a penny of risk on you, and if it goes up, they'll lose that. But if a bid gets hit on the other side, then they can make the full penny on the other side. So sometimes you're pretty much never going to be the first order that gets filled at any new penny on a stock, and unfortunately, there's really nothing you can do about it. But the one thing that you can do about it with what you're describing to me, depending a little bit on the situation, is to use those risk reward stops that you've probably heard me talk about. Where you can't really do this for your 1-to-1 kicks as much, because it depends on how much risk you're initially taking. Let me take a step back and describe what a risk reward stop is. Let's say I have a trade, I risked 10 cents on it, and now I'm $1 in the money. I'm up 10x my risk. Okay, I have an offer out at 97 cents. I'm making up a number. Stock gets to 95 cents. Am I going to give this stock back a full $1.10 to my stop loss to make an extra 2 cents to get my offer filled? I certainly hope not. That would be a terrible, terrible risk reward. Yet, there's a degree of randomness to some point on like exact highs and exact lows to like the penny. Is there really a difference to you on if you happen to be offered at 94 and get the fill, or you happen to be offered at 97 and you don't get the fill by 2 pennies? There's probably not. So in that situation, you can use a risk reward stop and say, you know what, I'm not willing to risk giving this thing back $1 to make 2 cents, but I'm willing to give it back 5 cents to make 2 cents. So I'll quickly throw a sell stop in for the stock that I have offered at 97 cents. Let's say I have 100 shares offered at 97 cents. I'll put a sell stop in for 100 shares at 90 cents. Now, one or the other has to trigger, right? If the offer gets filled at 97 cents, great, it's what I wanted anyway. I'll cancel the stop. Or if If the stop gets triggered, okay, not the ideal situation. I would rather make that extra 7 cents, but at least I didn't give it all the way back, that full dollar. So that's one thing that you can do. But note my example. You're $1 in the money at that point. You're risking 10 cents. What you can't do is, if you're risking 10 cents on the trade, and your first offer is 10 cents on the money at 1-to-1 to cover risk, and it gets to 8 or 9 cents in the money, and you're 10 cents in the money, you can't just put a sell stop 3 cents in the money. It just doesn't make any sense. You're almost better off just taking the loss at that point. That's kind of the only thing that you can really do there. As far as hiding your orders, I utilize I never use hidden orders, but I utilize refreshing orders if I'm showing size in a stock that is a little lower liquidity. If it's very thick, I prefer to be first in line. I prefer to get my rebates, so I show my whole size. But if I'm trading a thinner stock, thinner being a little bit arbitrary, but if I'm trading a thinner stock and I'm bidding or offering, this also depends a little bit, but more than 500 shares, more than 1,000 shares, then sometimes I might just refresh the order to hide it. Especially because in a thinner stock, I don't have to worry as much about being at the end of the line like you're describing, because there's probably not much other liquidity at that penny. I might be like one of the only offers or one of very few offers at that price. So it's not necessarily the end of the world, to be last if there's only a couple hundred shares there to begin with. So thinner stocks I'll refresh sometimes for larger orders. Thicker stocks I prefer to be at the front of the line. I prefer to get my rebate. Hope that helps. From Ben on Rivian. I like Rivian. We talked about it this morning off the open. Josh brought it up. I thought that this was a great one to potentially buy today for an RDR. I think that Rivian has value. I don't know where it has value. I think it has value because I don't think it's going to zero. This company is going to lose a lot of money for a very, very long time, and you have to be prepared for that if you're involved in it. But at this point, they've absolutely destroyed this thing, and I just think that Jeff Bezos and Amazon are going to keep Rivian alive alone. They themselves will keep it alive, just to have a competitor to Elon Musk, because those guys love to have I don't the only term that's coming to my mind is not appropriate, so I'm not going to say it out loud. They like to see who the bigger man is. I'll say it that way. So just because of that alone, I don't think that this thing is going to go bankrupt. But is it worth $15? Is it worth $3? Is it worth $30? I got no idea. This company is going to lose so much money for such a long period of time. But at these more depressed prices, if I can get an entry set up, I like the idea of a Rivian long. And today it gave it to us. So this is another one of these broken stocks that are growth names that have been absolutely destroyed in the last couple months, that could have been on the shopping list today for the market as the market was approaching support for like an RDR, along with some of the other names that I was talking about. So this gave a great opportunity to get long today. Now, I don't think I would chase $9 tomorrow. By that point, you have a bad risk reward and you miss the entry opportunity. Because execution, especially on counter trend trades, execution in all setups is really important, but especially in counter trend setups is really important, because a lot of times counter trend trades are going to fail almost as a rule, and having the good execution skills and ability is the difference between being break even on a losing trade or making money on a losing trade versus just just straight losing money in it. So hope that helps. Then back to Keen on a comment from his question earlier about the Qs and the IWM relative strength situation. I was of the thought process that in any type of fear, people would buy the Qs because that's what has been working, and sell the IWM because it's been more of a dog. It depends, I think, on what's causing the fear, to be honest. In certain situations, we see like Apple as a safety trade, but I think that the Apple as a safety trade is more of an economic fear trade, and a geopolitical fear trade is actually the opposite. People want to raise cash. And at least that's what the price action has been confirming recently. So thanks again, everyone, for the questions. It's a little bit after 5 o'clock, so I'll wrap it up there. The Benzinga people, if you're still here, you're too quiet. I know there's not a lot of you in here, but don't be afraid to say something. We're here to help everyone improve every day. So have a great night. I'll see you all tomorrow.